Hello and welcome. Let's talk about Powerball and taxes. That is just an amazing thing. We're kind of working some back of the envelope math here, and I just want to hit on who's really in it? Who are the winners in Powerball? And I think the government is probably the biggest winner in Powerball. I mean, for one person or two people to split $700 million, that's obviously life-changing for generations. But the government is actually going to pick up most of that money, and it'll go back into the federal and state coffers. So if you won Powerball and you get to choose, so you won $700 million, you have the option of either a lump sum distribution, just one time they stroke you a check, or you can choose an annuity payment, an annual payment every year for 29 years. What would you choose? Which one? Do you think you can do better than the annuity payments 5% increase per year? So if you pick the annuity, you're going to essentially get, and it actually is graduated, but if you just even it out over the 29 years, roughly $21 million, $22 million per year for 29 years. That is a boatload of cash, folks. But then remember, the government always wins. And that means that the government is going to pay, if you're in the $20 million a year tax bracket, you're a one percenter of the one percenters, and you're going to pay about 52% federal and state tax. That means that roughly $10 million a year is going to go to your federal and state governments. That is a huge tax bill. Make no mistake about it. The lottery is there to send money back to the federal and state governments. That is the purpose of the lottery. It is a tax, but it's voluntary. We get to go and we get to have a chance to win all of this free money, but it is a tax. So if you were to, again, pick the annual payments, you're going to pay $10 million a year for 29 years. And then you'll get $10 million. That's $800,000 a month. It's still a lot of money, but there's just as much going out to the tax agencies, to Uncle Sam, to the state of California. They don't need the money. They already have enough money. The other way to take it is a lump sum distribution. Now, unfortunately, the government Powerball isn't going to just write you a $700 million check. They're going to write you a check approximately, according to the website, $335 million. And that is, again, going to be taxed at 50%. That means you're going to give away, on day one, you're going to give away $175,000 to, a little less, to the federal and state government. Can you imagine writing a check for $170,000 or $70 million? That is a lot of money. And fortunately, you don't have to write a check. They do withholdings, and they're never going to let you just run away with that money. That's just how it works, folks. Let's back up a little bit. Let's go back to the annuity. Let's say you choose that. You say, you know what? I don't want to invest it. I just want to get my payment every year for 29 years. You're going to have this taxed, right? Every year, $10 million. If you die, if you die during that process, the lottery is going to require a court order. And so essentially we're going to probate the lottery winnings. And then once the court approves this, you're going to, I cannot believe they want to push this through a probate, but whatever. That as soon as they get the court order, then the lottery winnings can continue to be paid to the heirs wherever the court says they're going to be paid. As much as I hate it, I would love to say I would love to be the attorney who got to pick up a lottery winning probate case on a $700 million lottery ticket. That would be my retirement, right? Additionally, if you died with that and there was enough money left, which there would be an estate tax. So the estate tax is separate than income tax. So your heirs might be subject to a 40% estate tax plus another 40-ish% income tax. they could potentially be looking at an 80 or more percent tax on what's left if you died in the middle of this process. This is big. This is a big deal. You know, you win this once in a lifetime thing, and then you're going to turn around and give 50%, 60, up to 80% of it back to the government. It just doesn't even make sense. The lottery is there to fund governments. That's what it's for. They're going to tax the heck out of it, and you've got to be aware. I think if you win, I hope you win, take the lump sum. You're going to earn more than 5% a year, and you don't have to worry about the estate tax. We can do things. We can plan. We can make sure we can protect your family. You can avoid that 40% tax. You can even invest the money in such a way that you can probably avoid some of the income tax that the money earns every year. It's important that you get good advice. If you were to win this, and I mean, that would be amazing, right? When you win this, the first thing you have to do is go get really good advice, because all of your friends and your family and their friends are going to come to you with their hands out. And, oh, can I borrow this? Can I have this? Can I do this? That's what happens when people get rich really fast. And you've got to protect yourself. The first thing we got to do is guard against those taxes. Be aware, know what you're doing, and when you win, let me know. Call me and tell me that you won. I want to know. I want to shake the hand of a lottery winner who wins a $700 million Powerball. I think that would be awesome. Be careful, be aware, get good advice, and good luck playing the lottery.